Certainly joining us now is Daniel Flax, Neuberger Berman Senior Research Analyst. Yeah, if we forget about 2022, some of these stocks are doing okay. But anybody that didn't realize what we all knew, and that's that in a rising interest rate environment, multiples contract in the technology arena. So even though Meta might be up 70%, we know what the 2-year performance would be, Dan. So going from here, we do need to think about both the economy and what the Fed's going to do at this point. Would you grant me that?
Good morning, Joe. I think obviously the economy remains important. And with respect to the Fed, interest rates have obviously moved up rapidly in the past year. They may moderate or even come down over time. But I think what's going to matter for many of these technology companies is really the innovation and the growth. You mentioned Meta. They are, of course, been cutting costs. We're focused on them in terms of how they transition the business. They're still important to users and advertisers. If we look at Apple, what's interesting is that they're continuing to effectively execute on their product cycles. Yes, there's cyclical headwinds. China, we'll have to see how that unfolds. I think it could get better. But the iPhone install base is growing. And so the secular trends around cloud, around digital infrastructure, around artificial intelligence, those I think are vibrant. And I think that will matter for the companies that can capitalize on that over the course of this year and beyond.
We also need to factor in the recent developments, Dan, and that is not only did some volatility in the banking sector, it makes you wonder about whether the economy overall slows down because of less loans. But the bank that had the problem was really kind of a tech-oriented bank. So you wonder about maybe even some of the funding drying up for non-profitable, innovative companies, the ones that you're talking about. So it could be a double whammy. Could cast a pall on economic growth and make it more difficult to raise money for some of these companies.
For some, I think that's right, Joe. I do think that as the funding environment gets a little bit tougher, some of the startups or smaller companies may have challenges. For some of the bigger companies like Google or Alphabet, Apple, which we discussed, Microsoft, I think these companies can really use this period to play offense and invest in intellectual property, buy some smaller companies, perhaps make acqui-hires. And so what we've seen through other downturns, 08, 09, certainly this last few years with the pandemic and a challenging geopolitical environment, companies need to play offense and defense. And those such as a Microsoft, an Alphabet, an Apple that can do both, I think they can create additional shareholder value over the next 1 to 2 years.
They probably are doing on both because, as we're hearing, they're closing certain operations. There are more people losing jobs in tech right now, I think, than getting jobs. Maybe that's not, maybe it's net, maybe it's kind of even, but they can do both. I guess that they can invest in the areas they think have the most growth while they're trying to rationalize certain operations in an environment like this, because we do see layoffs announced every week.
I think that's correct. And a lot of these companies hired aggressively in the last few years, given the growth they saw, particularly in the worst of the pandemic, as really the world pivoted to a digital-only environment in many respects. And now as people come back more into the physical world, I suspect what we'll see going forward is really the best of physical and hopefully digital as well. And so those companies that are able to do that, yes, you saw Google and Amazon recently reduce the number of jobs, but those companies hired aggressively. What matters in my view, though, is that if they're going to innovate, deliver more value to their customers, be it in cloud, e-commerce in the case of Amazon, I think that will set the stage for better growth late this year and into 2024.